Dear children, welcome to my channel AME, that is Accountancy Made Easy. So children, here I am with one more question of past adjustment, but this time the level of the question is a little bit higher and we have omissions more than one. Okay, so without wasting any time, let us read the question. So the question says L and M are partners in the ratio of 2:1 with the fixed capital of rupees 1 lakh each. So both the partners, they have the capital of 1 lakh. Now partnership deed provides for the following, and what all has to be done here. Interest and capital at the rate 10% per annum has to be provided. Salary to L is to be given as 3,000 per annum. Well, be very careful about it children. It's not per month, it is per annum. Okay. Next, interest on drawings to be charged is L 5,000 and M 4,000. Fine. Then after closing the books of accounts, it was discovered that profit for the year ended 31st March 2025 has been divided equally without providing for the above provisions. Pass a single adjustment entry. So children, in this question they have more than one omissions. So how we have to proceed? The method is exactly similar as we did in the previous question. First question you must have seen in the previous video, and I will add the link of that video in the description box. You can check if you have not seen that yet. Okay, so that simple format only we have to follow, and the simple formula that we had learned there we have to apply here. Fine. So what we have to exactly do? We have to calculate the amount that should have been recorded for each partner separately as well as the total of that. Okay. So here we are going to write all those things which should have been given. So we can see from the question that IOC is missing. So we will provide IOC there. Then salary is missing, interest on drawing, and you can see the profit sharing ratio. Very important thing children. The profit sharing ratio is 2:1. So that profit sharing ratio also has been done wrongly in this question, that they have distributed the profit equally. So they have missed all those things, as well as the profit division ratio also is wrong. So in that scenario children, we have to calculate in this question divisible profit also. Fine. So in any question, if with these omissions profit sharing ratio is only one profit sharing ratio is given, it is same. So in that case you don't go for divisible profit, because the rest of the profit must be correct. Okay, only we have to do corrections for the missing provisions. But in any question, if the profit sharing ratio also is wrongly done, okay, so many times children don't understand in which question we have to calculate divisible profit and in which question we should not. Okay, so that is the line here to understand that if the profit also has been distributed in a wrong ratio, then we will calculate the divisible profit also. Okay, so let's start solving the question. Fine. So amount that should have been recorded, we will start with interest on capital. Interest on capital. And what do we do with this interest on capital? We credit it, right? So we can write here credit. And for L, it will be 1 lakh into 10%, it will be 10,000. And for M also the same amount, because both the partners have the same capital, 1 lakh each. Total becomes 20,000. Okay. Then next thing in the question says salary. So we will provide salary, and it is only being given to A. Salary also is credited to partner's capital account. So 3,000 in L's column and nil here M, and total also 3,000. Then the next thing is IOD, which is 5,000 and 4,000. So we will provide interest on drawings. Now the interest on drawing children, it is debited to partner's capital account. So we are writing debit in front of that, and it will be a minus item, negative item. So 5,000 and 4,000. Total it becomes 9,000. Okay. So normally we will end the amount should be recorded at this if the profit sharing ratio was correct. But in this question, profit sharing ratio also is wrong. It should be 2:1, but it has been distributed equally. So now we will add up this step, that is divisible profit. We are going to calculate. And children, divisible profit, how we are going to calculate? We will calculate on the basis of profit and loss appropriation account. Okay, the way we calculate divisible profit in profit and loss appropriation account, we are going to use the formula here. So what is that? Net profit. Okay, so net profit is 50,000 we have taken plus IOD. This also you can see in your previous video where I have explained that how profit is distributed, very small part in the video. So 50,000 plus IOD. What is the IOD amount? 5 plus 4, 9,000. Okay, so 9,000 to be added here, because this IOD firm is going to get back, earned from the partner. So it is the income of the firm. So 50 profit plus 9,000 will be, increased by that amount. Profit will increase by that amount. Then minus. Then all the appropriations will be taken, which is IOC and salary in this question. So minus 20,000, minus 3,000. In the ratio of profit we have to distribute, that is 2:1. Okay. So now let us do the calculation. 50 plus 59,000 minus 20 minus 3. So 23,000 we have to deduct from 59. So what will be the amount, children? The amount is going to be 36,000. That is 36,000 in 2:1 we have to distribute. Fine. So how do we distribute? 36,000 into 2 by 3 for L and 36,000 into 1 by 3 for M. Fine. So when we divide 36,000 by 3, what amount are we going to get? It will be 12,000. So L's share will become 24,000 in that scenario from the profit. And what are we going to do here? Credit that amount. And for M it will become 12,000. Right? What is the total of these two? This 36 only, because we have distributed that amount only here. Right? Now what are we going to do? We are going to find out the individual total of both the partners, that what L should have got if all the provisions were applied correctly, and what M should have got if all the provisions were applied correctly. So here it is 10 plus 3 plus 24, 37,000 minus 5, 32,000 is the amount that L should get. Okay, and M will get 10 plus 12, 22 minus 4 is 18,000. So M will get this much. And children, the total of these two amounts should be equal to the total profit for the year, because that is the amount with which we had started distribution. Okay, so yeah, it is coming out to be 32 plus 10, 18, 50. So 50 we are writing here in the total. And now step 2 is that amount already recorded. Okay, and here I will write to be reversed. So whatever has already been done, now we have to write that. So what has been done, children, actually? That 50,000 has been distributed equally without providing any provision. Fine. So 50,000 in the ratio of 1:1. In 1:1, and we are going to debit it. Why? Because it has already been given, which was wrong. So it has to be returned. It has to be taken back. So we will debit it. Fine. What is going to be the amount? Equal, we have to divide. So 25,000 each, and it will be put in bracket. Right. So total is 50,000 here. Now we will do the comparison of the amount that should have been recorded with the amount that is already recorded. Okay. So let us see now that L should have got 32,000, but he has only got 25,000 till now. So what we need to do? We need to give him 7,000 more. Right. So that is one way of understanding it, and the other way of understanding it, that which balance is bigger. So 32,000 is the credit balance, which is a bigger balance, and 25,000 is the debit balance. So which one is extra? Credit is extra. So that is how we say it is a credit balance. Extra means balance, right? That we are going to apply here. Similarly, we will do the comparison for M. So M should have got 18,000, but he has already got 25,000, 7,000 extra he has got in his account that he need to return, right? So we are going to take 7,000 in negative from M, and let us see how it will be done. 18,000 positive amount, 25 negative amount. So when we will deduct, we will get minus 7,000, and that is debit. Fine. So this is our correction being done, that M should be debited with 7,000 and L should be credited. Fine. Now we will proceed for the entry, journal entry. But children, always and always in the question of past adjustment, be very careful about the capital. Which kind of capital has been provided in the question? Is it fixed capital or fluctuating capital? So in this question, children, they have given the fixed capital. So we can do any adjustment through current account only. So most of the time what happens? Students do the entire question correctly, calculate everything correctly, but by mistake they write here capital account in the adjusting entry instead of current account, and they lose one very important mark. So that, children, you don't have to do this, okay? This mistake should not be occurred. So if the capital is fixed, please underline it in the very beginning only, so that you remember while passing the entry that you have to use current account here. Fine. So now let us pass the entry. It will be M's current account debit with 7,000 to L's current account 7,000. Okay. Now we will pass the, we will write the narration. Being omission of IOC, salary, IOD and wrong distribution of profit now rectified. So this is our question, children. Isn't it easy? Right? It is easy. Okay, fine, children. So I'll be bringing many more such easy questions for you in my further videos. Till then, I wish you happy learning of easy accounting.